Critical Man Pictures presents the Forex video training series, Brown Belt, Planning, Currency, Cross-Trading. If strong economic data comes out of Australia, you might want to look at buying the Australian dollar. Your first reaction would be to buy the Australian dollar, US dollar. But what if at the same time, recent data also shows the United States experiencing strong economic growth? Price action of Australian dollar, US dollar may be flat. One option you have is to match the Australian dollar against the currency of an economy that isn't doing so well. What could you do? Thank the Forex gods for currency crosses. Let's say you did some analysis of an economic calendar, and you notice the Japanese economy isn't doing so good right now. What do you do? Of course, you jump all over this opportunity and go long Australian dollar, Japanese yen. It's your job as a trader to take advantage of certain opportunities so you can put some silver dollars in that piggy bank. Because of currency crosses, you have the opportunity to match the currency of the best performing economy against that of the weakest economy without having to deal with the US dollar. Here's just a couple of the euro crosses. After the US dollar, the euro and yen are the most traded currencies. And like the US dollar, the euro and yen are held as reserve currencies by different countries. So this makes the euro and yen crosses the most liquid outside the US dollar-based majors. The most popular euro crosses are euro yen, euro pound, and euro Swissy. News that affects the euro or Swiss franc will be felt in the euro crosses, more in the euro crosses than euro dollar or dollar Swissy. Great Britain news will greatly affect the euro pound. Oddly enough, U.S. news plays a part in the movement of the euro crosses. U.S. news makes strong moves in pound dollar and dollar Swissy. This not only affects the price of the pound and Swissy against the dollar, but it could also affect the pound and Swissy against the euro. A big move higher in US dollar will tend to see a higher euro Swissy and euro pound, and the same goes for the opposite direction. Confused? Okay, let's break this down. Let's say the US shows positive economic data causing the dollar to rise. This would mean that the pound dollar would fall, driving the price of the pound down. At the same time, the dollar Swissy would rise, also driving the price of the Swissy down. The drop in pound price would cause the euro pound to rise, since traders are selling off their pound. The drop in Swissy price would also cause the euro Swissy to rise, since traders are selling off their Swiss. Conversely, this would work in the opposite direction if the US showed negative economic data. The Japanese yen is one of the more popular cross currencies and is basically traded against all other major currencies. Euro yen has the highest volume of the yen crosses as of February 2010. Pound yen, Aussie yen, and Kiwi yen are attractive carry trade currencies because they offer the highest interest rate differentials against the Japanese yen. When trading yen cross pairs, you should always keep an eye on the dollar yen. When key levels are broken or resisted on the pair, it tends to spill over into the yen cross pairs.